PulakFx YouTube channel. Now in this video I'm going to talk about the gold upcoming move for the next week. So before that, let's see what analysis I have made in the previous week and how that performed. So moving to this one, you can see gold weekly analysis. This one I made on 6th September. The price when I made this chart, the price was 1934, and you can see here in the descriptions I have mentioned. For now, approach should be buy with a stop loss of 1911 for potential up move till 1964 and 2008. So you can see on the chart how it worked. So I have mentioned here, must read the descriptions as well, so you can better understand what to do. See, when I given a buying, it was trading around 1934. I mentioned the stop loss of 1911 for a potential upside up to 1966 to 2008. So you can see on the fourth day it went up to 1966. So the first target almost achieved here. And now let's see what will happen for this week and this week analysis. Let's see. This is the one which I have made a few hours before. See, now what is important over here is that's the trend line which I have drawn here. That's the trend line, and now it is on the verge of breaking the trend line. Here is the triangular pattern formations on the chart. On a daily candle there is a triangular pattern formations, as well as it is about to break the trend line here. It broke in this trend line at this moment. It went down till 1906. Now again, after touching the resistance level here, it's again trying to break the trend line, and now again I'm expecting it to further. This is the projections which I have made here. So you can keep this as a stop loss, 1958 to 1960 you can keep as a stop loss, and your approach should be go for the short selling with a potential downside till 1886, and from that level I'm expecting a bounce back. So from this price, like 1940 is the closing price right now, so from here the approach should be go for the short sell in the range of 1945 to 1950 with a stop loss of 1966 for a downside potential up to 1900 and 1883. So that's what the analysis I have made here. Let's talk about more and different other time frames as well. Let's see. So you can see here, let's delete this chart. Let's see on a weekly. It's a downward slope is happening over here. If we will draw the trend line at this moment, it's still on the downside, and as long as it's not crossing the trend line in the upside, it should go further down. And 1862 is on a weekly support. It's saying weekly support around 1866, 1860, and here it is around 1897 as a major support zone right now. So until unless it's not crossing this red line, this trend line in the upside, it is supposed to be coming down, and there will be a weakness ahead for the next week also. So let's say on the daily candle, see the same thing here. As long as it is not crossing 1964 level decisively, as long as it is not crossing this high 1966.570, which is it made a high on 10 September, unless it's not crossing this high, it should remain in the downside, and the potential downside target will be 1907, the major support which from where it has reversed back. And the previously here on 26th August it reversed back from this support line. Now here also from this on 8th of the September it reversed back from the 1906 level. So this is forming a major support line over here. So the approach should be like go for the short selling here close to the stop loss level, like 1966 will be acting as a stop loss. So try to get enter into the short sale position near to the 1950 to 55 range, so your stop loss would be less, and there should be only 16 points difference will be there when the stop loss if you are going for the short sale at 1950 and currently it's trading at 1940. So wait for a little upside movement. If it is going to 1950, 52, 55 anywhere, you can just go for the short selling at that moment, because unless this trend line, this is not going above this trend line, it should remain negative and it should come down. So near to the 1950 to 1950 to 1955, go for the short sell and expect the target somewhere around 1910 to the 1886 level, which I have mentioned. So that's the next upcoming move for the gold above 1966. If it is crossing and if the stop loss get triggers at 1966, go for the buy, and there will be a potential upside up to 2008 to 2022. This will be the potential upside. If it is crossing 1966 and sustaining above that near to the range of 1970, you can go for the buy and you can wait for the target of 2008 and 2022 as an upside target. But the chances are very less at this point of time, because on the technical chart it is looking short. So try to go get into the short position near to the stop loss price, so your stop loss would be smaller, and then you can expect a potential downside till 1910 to 1886 for the next move. Next this week you can see this much of level. So gold, I am expecting it should be in a downtrend and there will be a pressure on the higher levels. So try to get into sell on rise positions. Okay, so that's all for the gold for now. We'll come back with a new analysis again. Till then, if you want, you can follow this trading view profile, PulakFx. You can find on the Google PulakFx and trading view. So you can follow this profile. I usually give the day analysis as well as a weekly analysis as well. So you can see all the ideas which I am publishing over here. So it can help you in your forex trading. And do subscribe this YouTube channel. See you again in the next video. Thank you so much.